All right, it's the 10th of September 2024. We're getting ready for the New York session to trade gold, and New York session starts in about 20 minutes from now. Okay, let's get to the charts. Okay, here we are. Let's go to the weekly time frame. Let's go to the daily. There's nothing much happening. Let's go to the daily time frame. As you can see, price has been ranging since the 19th of August. We've just been in a range, just bouncing off 2483 and 2530, just in this range, in a 450 pip range. Price has been bouncing. Yesterday's daily closed above 2500. Also closed at weekly resistance at 2505. Closed right at that weekly resistance, right? But we have no top wick, almost no top wick. So which means if there is no top wick, then there is no range for price to uh, go up, right? At least that's the idea. There has to be a wick for price to continue to have a range for price to fill that wick and then continue the momentum to go further. But here there is no range. We have a daily candle with no top wick. So price could reverse here. We could have a daily close below 2505 again, or we could come down, collect liquidity and then push up. That's possible too. But as I said before, as I said yesterday as well, this is not too important. This is not too important because if you're session trading, we just need to find where the high liquidity zones are and wait for a setup at those zones, right? What happens on the weekly and daily time frames are not that important if you're a session trader. So I don't spend too much time doing any analysis on this because I think it's an absolute waste of time. That's my personal opinion. If you're a session trader and you're trying to understand what the weekly time frame is doing or what the daily time frame is doing, it's just a waste of time, right? It's good to have a understanding of it if you want to, but I don't use this in my executions. Okay, let's go to the H4 time frame. Just give me a second, guys. Let me just figure the light out here in the room. It's a little bit dark. Just give me a second. I'll be back. I think that's better. Yeah. All right. Okay. So let's get straight into H4. Before we do that, let's look at the daily time frame here. We have a new fresh daily support that's been created here, right here. So you have a bearish candle, daily bearish candle coming down, and then you have a bullish candle next to it going up. So that's daily support. That's fresh. That's new daily support being created at 2497, right? So that's 2497 right there. Now let's get straight to the H4. Here's where analysis starts for me, right? Weekly, daily, not too much. I'm not that interested. This zone that we drew yesterday is still valid. Now, what I do recommend is starting from a clean chart and redrawing them. But just to speed things up, I'm doing it. I'm going to use these boxes, right? Because they are valid. We haven't come. You can see prices just tested this. Now it's just tested it for the first time. It's coming to that H4 supply zone, and we've tested it. And this is a high liquidity zone. I explained this yesterday already, because this zone engulfed this demand zone here and went further down. It broke this zone and went further down. So when I use the word engulfed, it means it broke an opposite zone. It engulfed it. It broke below it, right? So this is a high liquidity zone, right? Just as we had it yesterday, it's still there. Price has just come into it, just during pre-NY, I mean during the pre-NY session. Now this zone is also still valid. Now here price is not going to come that low, so we don't need to really have these lines here, these zones here. So let's look for the most recent ones here. It's a rally, two base-in candles and a rally, right? Or leg in, base, leg out, leg in, two base-in candles and leg out. The reason these are two base-in candles is because these two candles have more wick than body. And the reason that this is a leg out candle is because this has less wick and more body. The reason because this is a leg in candle is also because this has less wick and more body. Okay, so the close of this candle is 2500 and this low is 318. Okay, 100, 318. Okay, close, 501. Okay, perfect. Right, now that's our demand zone right there. Is this a high liquidity zone? No, it's not. It's not taken out. It's not taken out this zone, right? It's not taken out anything. And price has come very close to it already. Okay. Now, is there a zone here? It's very ugly on the H4. We might need to go down to the H1 and see what that looks like. Yes, there is. There is this. Okay. Now, the reason I've gone down to the H1 is not because I'm drawing an H1 demand zone, is because on the H4 there is something there, right? There is a drop, a base, and a rally here, right? Drop, base, rally. It's very ugly, but still there is one there. So we have to, because it looks like a demand zone, it can always be a demand zone, right? It might not be a high liquidity zone, but if it looks like demand, then it is demand. That's how that's at least the rule that I follow. If it looks like demand, then it is demand. Okay, so this looks like a demand zone, a drop, base, rally, ugly on H4, but when we go down to H1, it's very clear. We have a drop, a base, clear base, and then a push up, a rally, leg in, base, leg out. Okay, so let's put in the numbers there. That's 516 and 282, 516. Okay, perfect. Okay, now we got the most recent zones. Okay, we've got a high liquidity zone here. We've got a high liquidity zone here. We've got a high liquidity zone here. Now all these green boxes are demand zones, and all the red boxes are supply zones. But some of them are high liquidity zones and some of them are not. Okay, we spoke about them yesterday. If it's not clear, you can rewatch yesterday's stream. I've clearly explained it in that. Okay, so this is what we're looking at for the New York session today, right? We're looking for sells from this area, and we're looking for buys from here for now. Okay, so price is closer to supply, right? About 40-50 pips away from supply. It's already bounced at supply, and right now at this given point, currently price is about 150 pips away from the demand area that I would like to trade from, right? Now that doesn't mean that you can't trade from these areas. You can. I won't until they become high liquidity zones. And how do they become high liquidity zones? We spoke about this yesterday. Any one of these zones have to engulf an opposite zone. So for example, this here, it is resistance, H4 resistance, right? Or here in this case there is an H4 supply here. So a rally, and then there is a H1 base. There has to be an H1 or M30 base there, and a drop. Okay, so there is it's very ugly on H4 again, but there is a supply level there. If price does continue to close above this, then this becomes to me a high liquidity zone because price has engulfed this supply. Let's go to just okay, so this is what it looks like on the H1 time frame. We have a we've got that there. Very ugly on H1 as well. That's it. Rally, base, drop. Okay, it's M30 is the best I can do here, and the open of that is 493, 493, and the high here is 776, 776. Okay, right. I would go high though. Yeah, I would go higher here. 660. Yeah, almost H4 resistance. That's probably better. Yeah, yeah, that's probably better. H4 resistance. Rally, base, drop. We tapped it, came down, broke it. So it is an area of interest. This and the one above. The one above, obviously, because that's a high liquidity zone. This isn't a high liquidity zone, so I'm not gonna be looking to take any trades from there. But that is a high liquidity zone. That's somewhere I want to take a trade from. And if price does begin to close above this area, if price closes back above, then to me this is a high liquidity zone, right? Because this has engulfed, it has broken above and closed above this zone here, this supply zone here. Even though it's ugly, it's still a supply zone, has closed above it, and I would consider this high liquidity zone now. It's an ugly high liquidity zone. When I say ugly, I mean, to me ugly means weak, right? This this looks nice. Rally, base, drop, and took out a zone here, very clean, very clear. I will take a trade from here. I'm willing to risk here. Am I willing to do the same? Am I willing to risk the same percentage here? No, probably not. So if I do get a trade here, if price begins to close above or price comes back here and look for an opportunity here, I'll reduce my risk. I'll reduce my risk a lot to take a trade from a zone like this because it looks really ugly to me. Okay, so that's where we are. That's the H4 time frame. Now let's put this on. Okay. Where are we? Okay, I'm just posting the chart and analysis execution for the group. Right now, the daily SR above current price around. Yeah, we got 0850. We got 2513.50, and we got 2516.50, and we also got 2521. Okay, 2521. These are daily SR levels above current price. These four here, and then below current price we have a few here, which is 2497, 2497. That's what we created yesterday, and 2493. Okay, yeah, that's 2493, and the next one is 200 pips away, 2484.50. Yeah, that's about it. So 3 daily SR levels of interest: 2497, 2493, and 2484.50. Okay, and the ones above is 2508.50, 2513.50, 2516.50, and 2521. I round it to the closest round number. Okay, right. Now even though price is above these moving averages, to me price is ranging, right? It's just ranging. It's just garbage right now for the last 1, 2, 3, 4, 5, for the last 20 hours. Those are 4-hour candles. We've been ranging, right? Price is stuck in between this range and 82 pip range. Okay, that's the last 20 hours. So I would be interested in looking for sells from here to push price down further. If bearish volume is going to continue for the day, to look for sells somewhere here, or to look for buys from here to go up, or if this becomes a high liquidity zone, if this continues to close up, then look for buys somewhere here to continue up here. Okay, so these are my areas of interest: this one here, and let's see what happens here. How these candles close will determine if I'm going to be taking a trade from here or not. Okay, so these are my areas. So price has to come to those areas to give me for me to look for my setup. I mentioned clearly what my setup looks like yesterday. That's the setup I'm going to be looking for. I need to see that setup here, or here, depending on what price does, right? These are my 3 areas. Anything else in between, I'm not interested. Salsa. It's a London low. That's a London high. That's a London high. That's a London low. Okay, for sells, I'll either wait for a sell signal from supply. So if you're trading the indicator, I'll be looking for if you are trading if you are trading the signals of the indicator, then this is an area that I would look to take a sell signal from, right? Anywhere in this box, somewhere from here, or I will wait for price to pull back, further as it's doing, just to pull back, continue to pull back, create resistance on the M30 time frame, and then after that, with that M30 resistance, or after that, look for M15 or M30 signal to come further down and retest 2505 or even retest the London lows, which is around 2500. Okay, for buys, I'll be looking to take a buy signal from demand here or even further down, right? Or wait for price to create a new high in the New York session, pull back, create M30 support, and then again look for buy signal to retest the new high. Right? That's the plan. All right. So New York Envoy has just opened. Well, 20 seconds away. That'll be New York Open. And we got to keep in mind that price is struggling at this weekly resistance. Just keep that in mind. 2505. We're rejecting. We rejected once yesterday. We rejected again the second time. Then we closed back above, but we couldn't keep up the momentum because there was no volume in the Asian session. That's the Asian session. Let me just zoom in a bit. See what happened yesterday. This was New York session. We touched, we pushed down. We came back later during the New York session. We touched, we pushed down again. Then the day closed and we started, and the Asian session was around here. That's the Asian session, right? We closed above at the end of day. This is the candle that closed above, the daily candle closing above. This is what happened here. And then the Asian session opened. There was no volume, so price pushed back down again. Then this was the Asian session low. That's the Asian session high. Then during the London session, we went, retested the Asian session high there, came down, retested the Asian session low. So we created a new a London high and a London low. That's a London high there, and that's a London low there, right? And now again, we've broken above, and we went up, and again we've broken below, right? We've broken and closed below 2505. So we are ranging heavily. Last 24 hours, we've been ranging heavily at 2505. If you look at the H4 time frame, that's exactly what's happening. Right at 2505, we've been ranging. All right, so last 24 hours, that's all that's been happening. So let's see what happens today. All right, NY is open. Also, we have no news today. That's the trading week. I'm interested only in the red folders. I don't, like for example, I don't care about these orange or yellow folders at all. So if you go put in the orange folders, there are some orange folders here. If you go put in the yellow folders, there are lots of yellow folders. There are some yellow folders today at 7:30. None of them are important. At least not for me. I don't use any of them because over the over the years I've seen that they really don't move price. The orange and yellow folders don't move price much. Unless you're a scalper and you're taking 5-10 pips, then maybe of a trade. But if you're looking to take the move for the day, then really those folders don't mean anything at all. So there is no news today. We've got a big day tomorrow, CPI, and then we got a big day on Thursday, which is PPI, and then we got no news on Friday. So what could happen is today could be a ranging day, right? Because usually that happens just before CPI, the day before CPI. You don't get any setups, price just ranges. We could turn out to have it could turn out that we have a daily a doji a doji candle today, and so we got to be really careful the trades we take. We got to wait for price to come to us to those extreme points that I mentioned. Um, so the candle could close a doji. It could push up, create a bit of a top wick, come down again, and create a bit of a bottom wick, and close again exactly at around that area 2505. That's very possible because it's CPI tomorrow. So don't expect too much volume. Um, Yesterday we did about 220 pips. Uh, yeah, today we might do about 150, 200 pips as well. So price has just moved, has not done anything today during Asian or London. We've just moved less than 100 pips. Yeah, that's about 94 pips. We moved today. That's it. That's the move so far. So the point is, so now what we need to try to um, do next is try to find out what the high of the day is. Where is it going to be? The high of the day. So if this is the London high, right? Or this is the pre-New York high between the London and the New York session. This is actually, it's not even the pre-New York high. This is just liquidity, just grabbing liquidity between um, London and New York, right? So this is about an hour before New York Open is the pre-New York session. So this high was prior to the pre-New York session. So there's a very high possibility that this high is going to be taken out and price is going to create a new high of the day, right? We don't know where that's going to be. It's going to create it probably here, somewhere, right? We're going to create a new high of the day. Um, so if that is the new high of the day, then we got to see if we can take a trade from there to come down to our H4 demand area, which is here. So wherever that high is, 50, 60 pips, 100 pips, we got to see where if we can take a trade from here. Let's go just look at the M1 time frame. Yeah, it's a very nice rejection there. Just shows that there's just a lot of liquidity up here in that high liquidity zone area that we marked. There's a lot of volume there, and price is creating this kind of a base here. You could easily break this on the way down. Could easily break this, close below 2505 and continue down to this demand zone if price gets up there and if it does come down. Anyway, those are ifs and buts. Let's focus on what we see. Yeah, nothing right now. Yeah, so yesterday I did have a very tiny trade. You can see that 0.5% gain, and that was exactly where I had mentioned it was this trade here. It was right here there was if you look at yesterday, if you go back and look at yesterday's stream, you would have seen that I placed um, two orders there with very low risk. Um, it was, I think, it was on M15. I'd drawn the fib, placed it there, but I had placed an order here. Here. I placed an order here, right here, with a 6 pip stop loss. 6 pips plus spread. So that was a 10 pip stop loss, right? 6 pips plus spread. I'd placed a pending order there. You can see it on yesterday's stream. I'd placed a pending order, and towards the end of the New York session, it got triggered. You can see how it got triggered. You see, it got triggered here. So that had a total of, it had 10 pips. My stop loss was somewhere there. It got me in because that was right at the 2505 point as well, and it dropped about 30 pips, about 29 pips, right? So 10 pips stop loss, 29, 30 pips, but I risked a very little, and I was not too comfortable with it because it had passed my trading hours. So I closed it early. I closed it at around 1 hour, or at around, I think, no, sorry, at around 1.5 hour, or I closed the trade. I didn't want to hold it all the way down because I was not sure, because it was after my trading hours, and then also price had already done what it need to do here at the 2505. It already came here, touched it, and made the move, and I didn't get entry. I missed the entry by 1 pip. If you look at yesterday's stream, you'll see it, and it did drop um, 100 pips from there. So I didn't expect it to do the same thing when it comes back there. I expected it to break, and that's exactly what happened. It went up, came, and the next time it came, it broke that zone there, and it went above, but again it came back down. There was no volume. It was just ranging around the 2505 mark. Okay, so let's get back to this. Yeah, so price is pushing up as expected. We are pushing up. Now, if this candle, there is almost 2 hours for this H4 candle to close, right? Almost 2 hours. If this candle closes above this red box, then I would consider this a high liquidity zone, because we've broken above. The 4-hour candle is closed above it. I would consider this a high liquidity zone, and I'd be interested, because if this candle closes above, we would have somewhere the body somewhere there, and that would be a nice leg out candle. So that would be a rally, base, rally, and then this here, all the way starting from there, from the base of this, the open of this candle, which is 2503.92, right from there up to here, I would consider as a high liquidity zone, because that's our base now. It's a base that has broken a previous supply zone, H4 supply zone. That's the key, H4. It's broken a previous H4 supply. Even though it's ugly, it's still an H4 supply zone, or H4 resistance. It's broken that. So then I would consider this, but that needs to happen. I need to see that candle close above. So then I have a leg out. So then I have the rally, the leg in, the base, 3 base in candles, and the leg out. And then this zone becomes a high liquidity zone. It's H4 demand plus a high liquidity zone, because price has now engulfed this little supply above it. But until it happens, we don't know, and we've got an hour 45 minutes for that, to see if that happens or not, right? So it's just a thought for now. Let's park it and let's look at what happens. Look at the chart and see what happens. Okay. Today might be just a very slow day. Um, when you're trading on days like this, you got to be mentally prepared in advance for trading on a day like this, because you got to remember there's a big news event tomorrow. In fact, for the next 2 consecutive days, there's a lot. There's I mean, there's fairly large news events. So it's very likely, since we have no news today at all, yesterday and today, and because price is at a very key level, at a key weekly resistance level 2505, that price might not decide to move much, move too further away from that weekly resistance level. It might just um, collect enough liquidity for tomorrow, or it might just be bouncing around the 2505. um, because for price to move away from a level, for example, for price to move, this was New York session um, last Thursday, today Monday, Friday, Thursday, this was Thursday, last Thursday, right? This is a clear decision to move away from weekly resistance of 2505. It's a very clear decision in the New York session to move away from it. If you go down to the 15 minutes, it'll be even more clearer. Right? It's a very clear decision to move away from it. And you can see how price moved 240 pips away from it. So, um, you know, that's a very clear decision. We might not have a decision like that today because of the big news event tomorrow. So we might just have price range. Yeah, so how I've set up my trade manager is that when my trade goes 20 pips in profit, 30% of my position will close. Sometimes I have that at around 25, 30, 40, anything between 25 and 40%. I close 20 pips, right? 25%, 30% is a good amount to close there, in case price decides to go further, you know, against my entry and go towards my stop loss. I've at least closed 20% of I've closed at least 25, 30% of my position. So I'll lose less than what I have plan on losing. And then if the trade starts going in my favor, then 50 pips is a very good area to close another 25%. And the rest I will let it run to the opposite H4 supply or demand zone, as I mentioned yesterday. So if I'm taking a buy, then I'll let it run to the next H4 supply zone. And if I take a sell, then I'll let it run to the next H4 demand zone. So price did um, yesterday at the towards the end of my trading session, price did push away from this demand zone, this H4 H1 demand zone, and this H1 demand zone um, did engulf this H1 supply, as you can see very clearly. So if I just put a line there, we just zoom in. So that was, yeah, rally, base, rally. This leg out, took out that supply very clearly. There was a supply there. You have a rally, all of those base in candles on a drop. That's an H1 supply zone. I don't trade H1 supply zones and H1 demand zones, but it's the same idea. It's the exact same idea as H4, right? There's no difference. So rally, base, drop, that was a supply zone. And this zone took that out. And what did price do? Came in, so that zone, that area where this green box is, where the green line is, all the way up to that's like 33, 34 pips. That's a high liquidity zone. And what did price do when it came there? If you go down to the M15 time frame, it came down, it broke this low here, right? We got a sniper entry, price went up, then continued to go further up. Again, about a 10 pip stop loss. But I want to see what time that happened. This was the this was the new 4-hour candle open, and this was I remember if you watched yesterday's stream, then I very clearly said within the first hour of the new 4-hour candle open, price is going to be looking to collect liquidity. So this is the 4-hour candle open, and all the way up to around about 45 minutes is all of this is looking for liquidity, right? So at around 17:45 or 18 is a good time to look for a trade, and that's exactly when the trade happened. right? So it's again a 10 pip stop loss, and back to 2505. Back to 2505. It's about 100 pips there. That was an opportunity. I just don't take H1 setup. I mean H1 zones. I prefer H4, H4 supply demand zones. And if it's not clear on H4, then I've kind of fine-tuned it on H1, but it has to look like something on H4. Here, um, this is drop base rally. This was the H4 zone here. I was comfortable waiting here for a trade, but not here. Even though that's not a basing candle to me. That candle there is not a basing candle. There's a drop here and a rally there. There's a leg out there. That to me is not a basing candle. On the here, as I said yesterday, that's the basing candle. A drop, base, rally. That's the area that I wanted to wait. I've still got it marked here. That's where I wanted to. If price did come there, I would have taken a trade from there. That's where I want to take a trade from, because if I did get a trade in there, there's a lot more RR on the trade as well. It's 150 pips, right? That's the area. So yeah, do I miss trades? Of course, I miss a lot of trades, but I'm not going to change my trade plan just because I miss trades. I will wait at those extreme areas. Like I call them extreme levels. I'll wait at those extremes here, here. I'll wait at those areas for my trade, for my setup. Okay. So price is very slowly inching. Price is inching its way up back to that high, right? That's price grab liquidity there. So price, if it does get up there, it's going to break that and go further up. Um, that's when I'd be interested in taking a sell trade if there is one to take. Um, yeah, but it's not a very promising day today, to be honest. It's not a promising day. We might have to wait for the 4-hour candle to close to see what this looks like. If this is going to be a rally and a base and a rally, and a demand zone is going to be created there to look for a trade to go further up. That's possible, but we'll have to wait an hour and a half to see what happens. Yeah, but in that, while waiting for that hour and a half, if price does come here and gives me a M15 setup, sell setup to take a trade down, I will take it. I will take it. But let's see. So price came here very comfortably. This was the supply zone on the H1 that we had drawn. As you can see here, price did come there, touch it, kind of respected that area. Came there second time, came there third time. So it came there once, twice, 3 times, 4 times, right? 4 times in this zone. 4 times. 1, 2, 3, 4. So very likely gonna continue to push up. Volume's gonna come in, push up. Yeah, so on the 30-minute, we could push up all the way up there. This candle. This is the candle that started drop. I spoke about this yesterday. This is the candle that started the 300 pip drop. This M15 candle right here. This candle right here. That's the one. That's the candle that I'm gonna keep my eyes on. That candle there. And we are what 24 pips away from that candle. Yeah, just yeah, 25 pips away from that candle, from this candle right here, this 15-minute candle. That's the one that created this massive 300 pip drop on Friday. Price already came there and tested it once, but it was prior to our trading hours, so no trade there. So we wait in New York session to see what happens if price comes back there and does something similar. Yeah. Yeah, that this M15 zone aligns perfectly with this daily SR line of 251350. M30 resistance, volume there, wick, a lot of volume there. You see that's a liquidity wick, 100 and almost 120 pip wick. That's grabbing liquidity. It's a huge. That's a lot of sell orders coming in. That's what that means. A massive amount of sell orders coming in. That's exactly what that 120 pip wick means. A huge amount of sell orders coming in, right? So the idea is that maybe price they didn't, all of the orders weren't filled. So when price does come back around to that area, to that wick, that area, it does the same. It pushes because it's never come there, right? So if it comes there again for the first time, it might do the same thing. And that's the area I want to take a trade from. That falls exactly within my H4 high liquidity supply zone, high liquidity zone. That's the area. That aligns with this H4 support level as well. Perfectly aligns with this H4 support level. Price has never been there to that support level. There, that's an H4 support for those who are trading support resistance. That's H4 support. The price has never been there. So there's a lot of things happening in that area. So let's see if we do get a setup there or not. So the reason I haven't taken off this red box right here, I haven't taken it off right now as of yet, is because, and I explained the same thing yesterday as well. One M30 candle closed above, immediately the next M30 candle closed below, right? So which means this area is this zone is a area of interest, right? So I cannot delete it because I don't know what's going to happen. And now it's coming again, right? I don't know what's going to happen. We don't know what's going to happen. Price is going to continue to close above, or we reject again and close below. So we got to keep that. It came just once and pushed right back and continued down. It came again. And now we're trying to close, but we got 25 minutes before this candle closes. We've got to see how this candle closes. If it closes above, if it does close above, then the H1 candle closes above. If the H1 candle closes above, then maybe we can can delete it, because then prices, has kind of significantly on a higher time frame, on a more on a on H1 time frame, or not a higher time frame, but a better confirmation time frame, has closed above it. H1 is a very good confirmation time frame. M30 is a very good confirmation time frame. Those are the M30 and H1 are the time frames I consider for session trading as confirmation time frames. M15 not at all, M5 not at all. You can easily have an M15 candle, close above and then close below, and then again close above, then close below, because you get four M15 candles in a one H1 candle. But if you have if you have an H1 candle close above here, that means that for the last hour of 4 15-minute candles, prices continuously trying to push up and close above 2505 and this H4 supply zone. So we got to wait. We have another 20-25 minutes for that to happen. Yep, we broke above this high, so that's 969 high. Yep, we've broken above that high very comfortably. Great. Now let's see what happens. 8 minutes for this candle to close. Let's see how that candle closes. Now we are inside our high liquidity zone area. And I'm going to put a mark there just to 423, 423, right? That base there, open 385, close 386. Okay. We are 30 pips away from that area, but we are in a high liquidity zone. So now 608. Yeah, so we are now about 20 minutes away from the hour close. Yeah, 20 minutes, 21 minutes away from the 1 hour candle close. Let's see what price does. So pushed, rejected, closed below, went back up, closed above, rejected, went above, rejected, went above, tried to come down, couldn't. Here came down, rejected, went above, closed back below, came up, couldn't go further back up, came back here and pushed again. So this area 2513, 2512, 2513. Yeah. This candle here is an M15 buy signal candle in the indicator. This candle right here, right? This candle right here, because we had price pushed up, pull back towards the EMAs, and a buy signal, and you can take this trade. Stop loss bill there, so about 29 pips stop loss under the candle, and you already got 1 RR easily. There, that is a buy signal candle right there, right? There's nothing wrong in taking that trade. Absolutely nothing wrong. It's a good trade to take. I just didn't take it. It's not my trade to take. But there's nothing wrong in taking the trade because we are above these EMAs. You can see the EMAs have crossed. The fast has crossed the slow. Red has crossed the slow. Price is above the EMAs. Is trading above the EMAs. Above. Price above. Price created a new high in just before the New York session. Created a new high. Pulled back. Came towards the EMAs. If you go down to the M30, you can see that M30 support is created here, right? Exactly as it's mentioned in the trade plan. So your price created a new high, pulled back, created support, and it's also very close to the EMAs, just about 2 pips or 1 pip away from the EMA, and created M30 support. And if you go down to the M50, if you go down M15, you get your buy signal here, this candle. So as price breaks the high, you can take the trade, stop loss below that, and go. And then if price begins to come down and break, if it didn't go right up there, if it just went up here and come down and begin to break this low, this M15 low, you begin to manage your trade. So you close 50%. That's how we manage risk when price is in drawdown, okay? Because this would be your entry. You would enter as price breaks this high, but if it doesn't go to 1 RR, or if it just goes about 10-15 pips in profit and starts to come down and breaks its own low, then you can close about 25% there. And then if it breaks the previous M15 candle low here again, this low, then you can close another 50% there, because you don't want price to go down and hit your full stop loss, right? That's where you would place your stop loss, under this candle or under this swing low. This is the swing low. Under this swing low, you would place your stop loss, or under this candle, and you don't want your full stop loss to be hit. That's how you manage risk when you're in drawdown. That's how you manage risk. So if price breaks its own, if price comes down and breaks this candle's low, this own candle breaks its low, you can close 25%, and if it breaks this M15 low, you close another 50%. That's how you manage risk. Okay, we've got a minute for this candle to close. A minute. We have a rejection here. 049,666. Price is still pushing up. High. 10, 14. So 14. We are continuing to push up. Yeah, we are continuing to push up. Yeah, so the next candle right on the bat, it just opened right out of the, as soon as it opened, it broke the high. So we got to wait now. The high is broken. In the first minute or 2 minutes, if it breaks the high, you got to wait for now. This is the beginning of the next M15 candle, right? You got to wait for that candle to close, because as soon as it opened, it broke the high. So there is no trade yet. You got to wait for this candle to close, this M15 candle to close. As soon as it opened, broke the high. So we don't know if this candle is going to go another 50, 60, 70, 100 pips up or not, or if it's going to go. You got to wait for this candle to close, because this candle closed with no wick at the top, nothing, no wick. So the price, it could mean that there's a lot of bullish volume that it didn't have an opportunity for price to leave a wick. So it closed like that, or that there is no range for price to now continue further up, and price could grab liquidity from here and then straight away push down. So we've got to wait. Either way, we've got to wait for this M15 candle to close now. Once that closes, let's see how it closes, and then we can take our trade. And price is inching towards our price level, which is just like 28, 29 pips away. Either way, we have to wait for the M15 candle to close, because all right, in the first minute it broke. All right, in the first minute, this is that candle, this is the open of the M15 candle. It broke the high. If it hadn't broken the high, if this candle had pushed down, come down, then I would have drawn. Then the way I drew the M50, the way I drew the fib is how I would have drawn it in preparation for taking a trade, right? In preparation of taking a sell trade, this is how I had drawn it, and I had calculated my risk. My risk was about 9 pips plus spread, so that's about 13 pips, to see if price can come all the way down here again, right? Come all the way down to about 2505. And if it does break that, then we come down here. Okay, but it didn't. It broke straight off the bat. It broke the previous high, and it's trying to push up. So we wait for this M15 candle to close. When you have a plan, when you have a trade plan, and if that trade plan requires you to wait for a certain kind of setup, then you just wait. You don't argue with your trade plan. You don't argue with it. You don't try to contradict it. You wait for what your trade plan tells you to wait, because you've tested that trade plan, you've back tested it for a sufficient, you've done sufficient back testing, you've done forward testing, and you've seen that the trade plan works more times than it doesn't, right? And if the trade plan gives you a decent RR, then you got to believe the trade plan and never try to contradict that trade plan. Just wait. What's happening on the chart, what's happening, there's a lot of things that will happen, different things that will give you different information. But if you have a solid trade plan that tells you to wait for a certain thing, and then that's the only thing that you must see, and that's the only thing that you should be looking for, and everything else outside of your trade plan is just noise. And learn to ignore that noise. This to me, this is in the according to the trade plan that I've shared in the group, and according to the indicator, this is a correct trade. It's an absolutely correct trade to take. It's a 100% correct trade to take. In the trade plan, you will see dozens of these examples in the trade plan. On my Twitter, on my IG, dozens of these, where price makes a high, comes back, makes M30 support, gives a buy signal to go retest the high and go further, and it is a perfect trade. You got a 29 pips and it's gone 37 pips. Perfect trade, correct trade to take. But it's not what I want to trade today. I don't want this trade. This trade is a right trade, but to me that trade is noise. To somebody else, this trade can be their trade plan. So they see, they take it, they're done for the day. This is not my trade for today. I'm waiting here. This is where I'm waiting for a trade. The candle's got to close. Got to wait for the candle to close. I have no idea where this candle is going to close and how it's going to close. I don't know if it's going to close here, it's going to push down and close here, or if it's going to close up here. I have no idea. Got to wait 7 minutes for this candle to close. If you do get a sell trade here or here, if you do get one, this is an area 2505 or just above it, 2506. Is a good area to take um, some of your positions off if you do. We don't know that, but keep in mind this for all the reasons that I said before. Look at what's happened every time price came there. It's either rejecting it and going up, or it's going to reject it and go down. So you don't want to get caught in between that range when price is deciding what to do. You don't want to be a part of, you don't want to be in a trade when price is undecisive. You want to be in a trade when price has made a decision and has collected enough liquidity to move in a certain direction. That's when you want to be in a trade. That's so. Here is a sign saying that this is an area that we have no idea what's going to happen. It's when price comes here, bounce, goes 100 pips up, closes below, ranges for an hour or 2 hours or 3 hours or 4 hours, and then decides to go up. We have no idea what's going to happen at 2505 because that's what's happened in the past, right? Last 20 hours, that's what's been happening. 20 hours, 1, 2, 3, 4, 5, 5, even here 6, rejected 6, 24 hours. Price has been playing around this 2505. Price is pushing up. It's beginning to push up. Yeah, we're pushing up from that base here. Price rejected this area, pushing up. Let's see what happens. Let's see how this M15 candle closes. We got another 5 minutes for this M15 candle to close. Yeah, it's very likely break this high. I want it to break this high within the next 4 minutes. Yeah, it did. Good. Because I hate flat tops like this. I like that, but I hate this. right? Yeah, it did break. Thank God for that. Let's see where the candle closes. Nine. Yeah, pushing up. Nice. 256 high. 272. 278. 287. 309. It's great. Yeah, and we have touched our area. So high 397. Okay. Now we have 2 minutes for this candle to close, and we've touched our area perfectly. Okay, perfectly touched our area. Let's look at that. That's 11 pips. 11 and 4, it's 15. So, so like I showed yesterday, it would be about 15 pips. I'm willing to risk about $15 on this trade. But let's gotta wait for the candle to close. Gotta wait for the candle to close. Gotta wait. Candle price can push further higher, or the next candle, the next M50 candle can break it right off the bat. And then if that does happen, you got to wait for the next M50 candle to close. Also keep in mind this is the close of the 1 hour candle, right? So this candle closes, we kind of don't need this now. We've got, yeah, we don't need that anymore. Yeah, I got 50 seconds for, so 0.5 and 97, 14, 37, 37. Yeah, it broke even higher. It's gotta wait. We gotta wait. High 499. Okay. No, we broke right off the bat. We broke the high. Right? We did. Yeah. First candle. So we gotta wait. We gotta wait. First candle broke the M15 high. So that comes off. Comes off. Now we wait. This was the open of the candle. broke here. So we got to wait for this M15 candle to close, because I need that M15 candle that does not break that high. I need a candle that does not break the M15 high in the first couple of minutes. I need the candle low on the high of the candle to be able to draw the fib. And only if the candle closes do I have the low and the high of the candle. So right off, hardly any wick at the top, very similar to this candle, broke above, and exactly what happened here happened here. That candle right on the first minute, first few seconds, broke the high. That's exactly what happened here. Broke the high. So we wait. Gotta wait for this M15 candle to close now. Now the 15 minutes. Now there's an hour for this. There's an hour for this candle to close. For this H4 candle to close. There's an hour. If it does close like this becomes a demand zone. And it becomes a high liquidity zone. This right here. And I would consider that as a high liquidity zone and look to take buys from there. But that's a whole hour away. Let's see what happens here in the next 15 minutes. We are right there, exactly at that M15 candle that caused the massive 300 pip drop. We're right at that candle. Good. We wait patiently and we wait for this candle to close, see how this candle closes, and then decide if you have to take a sell trade or not. Okay, I'm gonna be back in 5 minutes. We got some time for this candle to close. We got about 11 minutes for this M15 candle to close. So let's wait. Okay, 6 minutes for this 15-minute candle to close. About 50 minutes for the 4-hour candle to close. We've come exactly to that area that we had marked previously. Early on in the session, we had marked that area. And we've come exactly to that area right now, and we have some sort of reaction. Yeah, on the M1, you can see the price is clearly pushing down from that area. If you look at the M5, price has rejected that area. Also with a bit of bottom wick, so it does have range to come down. I got to wait for this 15 minutes to candle to close. Got 5 minutes, but the candle has to close, and the next candle cannot immediately break the high of the candle. That's important. So we draw it. It's 9521170. Yeah. Let's get rid of these green lines. We don't need them anymore because price has already come there. Now we got to see what happens where this 15-minute candle closes. If it's gonna go up another 50 pips and close above here, or if it's gonna come down and close further down here, or if it's gonna close a doji. We have to wait and see. And the next candle, the next M15 candle, should not immediately break the high. If it does, then we got to wait for that M15 candle to close. Price did tap into this perfectly, tapped into this supply. See, look at that rally base drop on 1 minute time frame, tapped into that and rejected it. Quite hard, yeah. So if you do take a trade here, that's 8, 9, 9, 4, 13, 14 pips. Stop loss of about 14 pips. And yeah. Fourteen. 3 minutes for the candle to close. 15 pip stop loss. I'm willing to lose about $15 on this trade. So 2 minutes for the candle to close. We have a rejection wick there, and we have a rejection there. A push down. Right. Stop loss would be 4 pips above here, so 21. $61. 4 pips. Minute and a half. 0.1. Okay. Few seconds more for the candle to close. Now, is the price going to push up 27, 28 pips in 20 seconds? Maybe not. 20 seconds, push up 25 pips? Nope. Okay, so the candle is going to close like that. 5 seconds for the candle to close. So that's the open, 417. Okay, and another one there at 33, 45, 34. Okay, this high here, 42. Okay, and then the stop loss on that trade, because now it's closed like this, right? That's how the 15-minute candles is closed. That's what the 5-minute looks like. 30 minutes still open. So that's what the 15-minute looks like. So now we want price to come here, get us in, and have a trade without hitting our stop loss, hopefully. So so that's okay, perfect. All right, that's the stop loss. So on this trade we're losing 14 pips, 7. This trade another 5 or 6, right? So under $15, we are well under $15. And if price does come up there, maybe I'll consider if I need to take another position here, because we are still under, very much under 1% risk for the day. If you do get triggered, then yeah. This trade can go in one of several ways. Price may not come to our entry like yesterday and continue down, or price could come to our entry, get us in, and stop us out, or price could come, get into our entry, and we have a winning day. Any one of those three things can happen. The only thing that you can control in any one of those scenarios is your risk, and that's the only thing that you can do every day with your setups that you take. Control your risk. How much are you willing to lose to take a trade? How much are you willing to lose to be wrong? Price is reacting to this area right here. We tested it, pushed down. So that's the fib. That's how I draw the fib from the low to the high. So it's start, end. I discussed this yesterday exactly how it's done, how I draw it. And uh, if price begins to start closing very strong bullish candles closer to here, I will look to reducing my risk by closing at least 25% of the position, so that when it does hit my stop loss, I don't lose the full risk that I had planned to lose on this trade. That's the key. I am risking less than 1%. Yeah, I'm risking about less than 1% on this trade, but I don't want to lose that 1%. 8 minutes for this M15 candle to close. If this candle closes here, the next candle could break the high and either continue further up or break the high and then continue down. All depends on where this M15 candle closes, this current M15 candle, how it closes and where it closes. So 8 minutes for this candle to close. But we've placed our pending orders. I've placed my pending orders, and we wait. Stop loss is there, 4 pips above the end of the fib, and yeah, prices, well, it did exactly what it did yesterday, a pip, 1 pip away. 1 pip away from entry, 1 pip. 1 pip, exactly a pip. Let's see if it comes back and gets us in, or if it does continue down, straight down. It's be interesting if it doesn't get us entry and just continues down 50 pips. That happens very often. Oh, there we are. We got entry on our first order. The second one is higher up. It's at this M5 high, the high of this. I want to see if this high will break. This high 42, 543. Yeah. But we've got entry. We've got entry right there at the tip there, which is, yeah, right there at sniper entry, just one pip away from sniper entry. And what I'm going to do is I'm going to make that 25%. So if this does go in our favor, at 20 pips, 25% of my trade should close. 20 pips is these lows here, these lows, this M5 low here, but we're going higher. Yeah, second entry is active. Now let's see what happens. So stop loss is 10 pips away from the second entry. Second entry 10 pips away, and first entry 14 pips away. Right? Now let's see how this trade plays out. So what I've done is I split my position into two, right? I was allowed to take one mini lot. I split it into two, and I took them at two levels, just about four pips apart. And what I don't want is to lose my risk that I had allocated for this trade, lose the entire thing. If I'm losing, that's fine. It's absolutely fine to lose, but I don't want to lose the entire thing. I want to lose some part of it, not the whole thing. Okay, we are 4 minutes away from the 30-minute candle close and the 15-minute candle close. Now, this 15-minute candle close, if it closes a bullish candle, the next candle can very, very likely, almost certain, to break this candle high if it closes as a bullish candle here. If it closes exactly the way it is now, the next M15 candle is going to break this high, at which point price could easily push up above the end of this fib, which means we are very likely to get stopped out on this trade. So it's very likely that this candle is going to close a bullish candle, and if it does close, I'll look to manage my trade. I'll look to close at least 25% of my positions. 25% of both positions. I'll just click this button, and then immediately 25% of the position should close. So then I will have lost hopefully less than my initial risk. So this high, currently the high of this candle is 1459. So let's just put a 1459, but that high could change. Yeah, it changed. High 463. Oops, we are going up. Yeah, now we're gonna have to manage this trade. We are breaking. We are going further up. We are going further up. Yeah. At which point I've closed 25% of my position is closed now. So now right there, as soon as price touched there, I close 25% because I don't want to lose my full risk. A minute for this candle to close. 1 minute. If it breaks the high again, I close another 25%. I'll close a 50% instead of 25. Yep, closed it right there. Closed another 50%. So now from 5 microlots, I'm down to 2. And now I'm going to close another 25% there because this thing has broken. So I've lost now half of what I plan to lose. And if this breaks, this high breaks, I close the entire trade. Yeah. So price came down 20 pips, right? 30 pips. My entire positions got closed because I just had 1 micro left. So 25% was, that's all. That's the minimum that has to close. So it closed my position. And I lost, instead of losing $15 on this trade, I lost $1.90 on this trade. Now, I lost $1.90 on this trade. $1.90. $1.90 on this trade. $22. If price does come back up here, I'll look to add a position on this with the same stop loss. If it comes here, same stop loss. Yeah, let's see. I want to see 30-minute candle closed bullish. The 1 hour is pushing down. 26 minutes for it to close. The H4 is pushing down from that area. 25 minutes for it to close. 30-minute did not break the previous high. 25 minutes for that candle to close. Price does come back there. So this high 537. It should break. It should break this. It should break the. I want to see a pullback. See if I can give this setup a second chance. It should break. Once it breaks, it may pull back. Yeah, broke. Could pull back somewhere here. 45, yeah, 45, 40. And that's 22 pip stop loss. So here, that's 22 pips, okay? It's 22 pips. I'm still willing to lose a $15 on this trade because I've just lost $1.90, $15, and my lot size is 0.07. That's the amount I can take on this trade, right? 0.07. So I've put in 0.03 here. If it goes further up, I'll take another position. Maybe here or even in between here. Closer to the sniper is better, but price may not come all the way down, be up there, because it's already it's grab liquidity. It's gone grab liquidity from just above that and now pushed down. Right now it's going to continue to come down. Look at that. It's going to continue to push down. And our first area where price is going to kind of bounce off is here, which is 2510, 2510.50. From there, that's about 40 pips from the entry. Because I manage risk, I was not able to have a position coming down. But also because I manage risk, I didn't lose a lot. Because had this trade continued, had this candle continued further up, and I held my entire position, I would have lost the my entire risk that I was willing to take on this trade. But because I closed positions, as you saw, I closed positions while candles were started to close up. I closed positions. I lost just $1.90. That's 0.09% of my account. That's all you can do. All you can do is manage risk. Price is pushing back up. See what happens. See if you get up there. We are at this daily SR level. That's the exact area where price is reacting at right now. We had mentioned this. I'd mentioned this in the group chat. 251350. That's exactly where price is reacting now. Price is struggling there, 251350. So we don't know what's going to happen, if price is going to start closing above it and continue high, or we are going to reject this for the rest of the day. If this is the daily high, this right here is the high of the day, and price is going to now for the rest of the day continue down. We don't know that, but we have to see what price does. If price comes back here, now that we've broken below these lows, price could come back. And if you watched yesterday's stream, you'll see what it's very similar to what it did yesterday, right? Starts breaking the lows, then comes back to these areas, and then rejects these areas to continue lower. But it might not come. It doesn't have to. If it's collected enough liquidity, it doesn't have to come back up for more liquidity. This 15-minute candle might close here. Hopefully the next 15-minute candle, this candle is going to close in 5 minutes. If the next candle, before it continues down, it'll need to create a top wick. So hopefully that will give us that top wick there or somewhere here. 316, close 317, 316. Yeah, price is pushing down heavy. Yeah, that was the trade. That was the trade. I just don't like holding drawdown. So that is why I managed the trade. But that was the trade, and that was the initial stop loss, right? See, it was from the end of the fib, 4 pips away, and it did not touch the stop loss. So it did break this high. It broke the high of the end of the fib, but did not reach the stop loss because we didn't get stopped out. Our last position did not get stopped out, and it rejected the high of that the end of the fib, and it's pushed down 55 pips. And this was it was a 12 pip stop loss. We're pushing down now. Yeah, it's unlikely price is going to come back up now. It's collected enough liquidity. This was the push up here. Came back to collect liquidity, didn't need to come back all the way here. So it just came there and then pushed straight down. Pushed 40 pips straight down. I'd be happy if I end today with a $1.90 loss. I'll be very happy because I came to the charts today um, ready to lose more than that, right? Ready to lose about 1%. But if I can leave the charts today having lost less, taking my setup, that's the key thing. Taking my setup according to my trade plan, waiting for my setup at my area of interest, waiting exactly for everything in my trade plan, literally for everything in my trade plan, taking that setup, and if I can walk away with a $1.90 loss, very happy. Yeah, price close there, right there. No top, no bottom wick, close right there. We are at another daily SR level. We could push up 2 minutes for the 15-minute candle to close. We could push up to create a top wick. I don't know where that top wick is going to be created, here or here or here. I don't know, here. But I don't want to take a trade here. I don't want, that's too far away from my stop loss. That's for 39 pips away from my stop loss. I do not want to take a trade there. This, okay, grudgingly I'll take a trade 24 pips away from my stop loss. I'll take a trade there if it comes there to create a top wick. I doubt it, but if it does, I'll take a trade there. Ideally back here, but it's very unlikely the price will come all the way up there again. Another comeback, another 44 pips, unlikely. But can happen, anything can happen. 15 minutes, a minute, less than a minute for this candle to close. If price is to continue further down, 22505, that's 50 pips away. It needs to come back for a top wick. It needs to grab liquidity. If it does grab liquidity from here, unfortunate, I'll not take that trade. But if it does come further up here to grab liquidity, then I will get in on that trade. Okay, 15-minute candle has closed, just closed. So there, strong bearish candle, right? So if you if you're trading the signals, let's see, as it's a candle right there, 65 pip candle. That's the signal candle right there, right? But price has to break the low. If you're trading the trade plan, then price must break the low of the signal candle to get in on a trade. It can break the low and pull back. You can get in at, according to the indicator. Indicator will give you 3 different entries. It'll give you a breakout entry. It'll give you an optimal entry somewhere there, and then it'll give you a sniper entry somewhere there. So you can take any one of those entries, but those entries will appear only when this candle breaks this signal candle low. If it does not, if this candle, this candle right here, if this candle does not break this signal candle low, you will not get those entries. The indicator will not show you those entries. It'll only have the signal, but it will not show you the entries, so which means you cannot take that trade, because this arrow will turn gray, because according to the trade plan and according to the indicator, according to the signals in the indicator, the next candle must break the low for this to be a valid signal candle. If it doesn't, it is not a valid signal candle. So this is like an early warning signal. If you were trading the trade plan, and if you're trading the buy or sell signals of the indicator, okay? But what I'm showing right now is a similar but a little bit different method of trading. If you do not own the indicator, if you do not have the indicator, or you do not want to get the indicator, then you can still trade it without the indicator. You can trade the way I trade, just on a blank chart, on a naked chart, just by using this fib. I've shown how I use this fib, how I kind of trade. Okay, we've broken the low, so price did create a top wick there, and we did break the low. So now that is a valid signal. And unfortunately, we might not get in on a trade here. We might not get an opportunity to take a trade here, because we did break the low, and it's very unlikely that price will come further up again to create another top wick. So we may just continue further down, all the way down to 2505, which is our weekly resistance. Come back there. So, and then we could probably range there or continue down for the rest of the day. But that was the trade. That was the trade according to my trade plan. That was the trade for the day. The one that we were partly a part of, that I was partly a part of, that trade there. Yeah. We also have about 10 minutes, about 11 minutes left for the H4 candle to close. And like I mentioned yesterday, once the 4-hour candle closes, when the next 4-hour candle opens, the first 45 minutes of that 4-hour candle is if price requires more liquidity to go in a certain direction. If it does require more liquidity, then the next 45 minutes is going to be price moving in up or down to grab that liquidity to continue in a certain direction. So you got to be very careful trying to take a trade within the first 45 minutes of the new 4-hour candle open. That's what I'm trying to say. Yeah, we are pushing down heavily, pushing down. Price beautifully reacted. If you Remember early on in the session we spoke about this M15 candle that caused the 300 pip move down, right, on Friday, and price is reacting to this very candle, to that very candle. It's reacting exactly to that candle. So that's there, that's the top of the candle where my stop loss is at. And look at what price has done. It's just kind of mirroring that candle, right? That's what we mean by price mirrors things on the left. Not always, at important areas. Remember that it doesn't mirror price action everywhere all the time, but at valid areas, at important areas, price mirrors things on the left. You can see this candle right here, this M15 candle, which is a 72 pip candle, was mirrored here. Look at that. 70 pips, 67, 68 pips. That candle, it mirrored it. Now, there's another candle to mirror, 61 pips. Will it? I don't know. Because it might come there, because this candle came straight to 2505 and bounced off there. So this candle could do that, or the next candle could do that. Come down to 2505 and bounce off 2505. Any which way, that was the trade to take according to my trade plan. That was the trade. Yeah, we're pushing down. We closed, this M5 candle closed below this support area, and the next one is pushing down. Yeah, we're pushing down heavy. We're coming straight down to 2505. Yep, that's it. We can now confidently close these pending orders because price is it has no need to come back up there. And that's the move right there. So that was the sniper entry right there. So just a recap. This was the candle, right, that we drove the fib on because price did not break the high in the first couple of minutes. So we drove the fib there. We took our entry exactly at sniper, but unfortunately price pushed further up. It did not stop us out, but we managed the trade because it pushed further up and broke above this high, above the end of the fib. It broke above it by a pip, by a pip. It broke above, right? Just by a pip. Yeah. Just by 1.4 pips, it broke above. So we manage risk because we didn't want this stop loss to get hit. This stop loss is 4 pips away from the end of the fib, right? We did not want the full stop loss to get hit. I hate stop losses getting hit. Uh, I don't mind if I get 10%, 20% of my position hit stop loss. I have no problem with that. But I hate anything more than 30% of my position hitting stop loss. I just absolutely hate that. So therefore we manage risk. And then soon as price did break the previous high, or broke above the end of the fib, it just absolutely tanked down, right? Completely tanked. Yeah, completely tanked, 89 pips straight down. Very similar to what happened yesterday. So now we are prices price is rejecting this area. It needs to close below this small demand zone M15 to go further down to 2505. That's what needs to happen, and that's right there, and it very likely will. M5 The next M5 candle might pull back and close below, or come down straight down to 2505 because it has already grabbed the volume that is required. See, once the price breaks a high like this, a very important structure point, the way I draw it, right? I've seen this happen time and time again over several years, many, many years. That's the reason I trade the way I do. Once it rarely, in my experience, it rarely ever breaks this. Rarely, ever. It always comes close, but never breaks it. But if the times that it does break, which means it's grabbed all the liquidity that it needs to make the move down, right? And this is the move. The move is over now. If you remember what I said yesterday, once it comes to this point here, 7RR from your sniper comes to 7RR, the move is done. This trade is done. There is absolutely no need for trying to look for a trade here any longer. Okay, it's done. This move is done. Right? It might come further down. We don't know, but this move is done. So now we get rid of all of these things because yeah, that was a trade. Get in here, came down, hit that. Yeah. This high is 514 and 853. 48. 514, 853. 4853. Yeah. 1424345464. Right. Okay. A minute for this candle for the just a minute and a half for the H4 candle to close. If the this doesn't seem like it's going to be a base, right? Because we were expecting the candle to close somewhere here so that this could be a rally base rally, but it's not. It's closing. It's got a minute to close, and I don't think price is going to move another 50 pips in a minute and close somewhere there. It's a heavy rejection there, a heavy rejection. So this H4 demand stays exactly where it is, right? This H4 demand stays exactly where it is. I will consider this a high liquidity zone, even though it looks ugly. I will consider this, and I will, if price does get up here, I will take a trade. That's a 20 pip stop loss. If it gets up to the sniper, I will take a trade there, because this is a big move. This is that big candle. We did not create a, this is the 4-hour candle open. That's how the candle closed. So it closed right at that. So there is no leg out. There is no demand zone here. There is no demand zone with these big, including these bases. There is no demand. If this candle closed somewhere here, then this would be a base, 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 and then the leg out candle. But we push straight back, so there is no, but there is one here. There is this ugly drop base rally, this ugly one here that broke this one. If you remember at the beginning of the session, we had a supply zone right there on this H4 resistance, and price did break that. So if you go down to the H1, it's very clear. So that's how we had the zone somewhere there, like that, and price did go break it. So this is a high liquidity zone. I will be interested in taking a buy if price does come down there, right? But it depends again. Just you've got to meet all our criteria. So if price comes back up here, 70 pips away, 75, 80 pips away, up here, be willing to take a trade. And if it comes down here, 50, 60 pips down, then let's see how the M15 candles close, and I'll be willing to take a trade. But right now, this is the open of the new 4-hour candle. So for the next 30, 45 minutes, we just got to watch. I've got to watch. I just watch. I don't open any trades unless they come exactly to my area within the next 30, 40 minutes. If price does come here, I'd be interested in taking a trade there. But unless that happens, the next 30 to 45 minutes, I'm just watching, doing absolutely nothing. So that's an area of interest for me. And that looks clean. Yeah. No, no, but it's done. So once that high broke, once price broke this high and the candle closed, the next candle did come to sniper, and it did not break that high, and it just continued, plummeted down after that. But we couldn't take any more positions because we were already in a trade. So that's done. That's done. Yeah, that trade is done. The trade is absolutely done. And the 4-hour, what does the daily look like now? 66, 34. We've come to weekly. We've come exactly to weekly resistance. Back there again. And yeah, price could just probably just range here. Remember at the beginning of the session I said that the daily candle could end up being a doji. And when we started the session, this wick was here. That was the high of the day, somewhere there. And we went to another 60, 70 pips. We went above, created a top wick, the high of the day, probably the high of the day. And we're pushing down, but price could just land somewhere here and close here. I don't know if it has enough volume to continue further down, because if it does continue down, it's got yeah, if it second, if it does continue down, it has if it does begin to close below 2505, it's got 2500 psychological number, and then it's got 2497, which is daily support, and then it's got 2493 daily support. So it's got too many obstructions too close to each other. Too many obstructions too close to each other. It's got 505, 2505, 2500, 2497, and 2493. All right. So within 100 pips, 120 pips, it's got four areas that are going to stop price eventually. And to break these, to break 2500, to break this daily support, this new daily support that's created, to break this old daily support, price has to have a lot of volume. And on a non-news day like today, that's very unlikely that price is going to be able to break those four key levels, those four um, important areas, and continue even further down. Because there is no news today to do that. It needs volume. And news, when you have a high impact news event, then that it does that. Um, yeah, so we are rejecting 2505 as expected. We are rejecting that area, 2505. Yeah, we are rejecting that. Zero 0392. What does that look like? 03.92. Drop base rally this year. Drop base rally. Just want to see what that looks like. What does it look like on the M30? Yeah. Let's see. That area is interesting because we did take out here. We did take out this. Take out this. So that's important. Then it came back and I took out that again. So that whole area is important. So you got to see what price does there. It is H1. It's H1. It's an H4 area, an ugly H4 area. Like I said several times before, it's a very ugly H4 demand zone, extremely ugly. And when I mean ugly, is I just mean that it might not have enough liquidity. That's when I say ugly, that's what I mean by ugly, that it might not have enough liquidity to push price in the opposite direction. Okay, that's what I mean by ugly. So, but nevertheless, it is an area that broke this. This high was 50660, 250660, and this high is 250776. So this move up broke this high. That's the only reason I'm considering it as a high liquidity zone. And on the H1, it looks a little better than the H4. And I brought it up there because that's a doji, and that's doji is part of the like a Bayesian candle there. That doji, it's got absolutely no body and a lot of wick, so I consider that as a Bayesian candle. Um, and yeah, so we see how what price does. Price has tapped into 2505. Let's see what it does. But that was the trade to take. Once this broke the high, you could have taken, redrawn the fib. I could have redrawn the fib here and taken this trade. 6 pips, 6 plus 4, 9, let's say 10 pip stop loss, 11 pip stop loss at the most. Come all the way down to 46 there, and come all the way down here to, as we said, that's the place where we're expecting price to come to, and it did come. So 10 pip stop loss and a 97 pip move down. So that's a decent RR trade. So you guys now see how I trade. You guys see how I draw the fib and why I draw the fib the way I do and when I draw the fib. All of that's important. So I've drawn it here, right? But then unfortunately during the latter half of this M15 candle formation, it broke the high. And I was already in a trade managing risk, so I didn't want to add more positions to that trade. If it did stop me out and then this candle closed, then I would have looked at this candle as a new trade, new opportunity to give this idea a second chance. And this idea, giving this idea a second chance, is drawing the fib again from this low to this side. So this is the start and this is the end. And then the stop loss goes 4 pips above that. And the entry is right here at the sniper entry, 251471, right there. And the TPs would be your first area, right? Because that's the level, that's a 7 RR level, 2510. And you can see how price, when it came there, it did bounce. There was a reaction there, right? It always happens. There was a reaction there. The reaction wasn't a big reaction. It was a 20 pip reaction, but there was a reaction at that level. And then price, because there was a lot of volume, price did continue to push down. And that is where we were expecting. We were expecting price to come to 2505, and that's exactly what it did. So it did move on 97, 100 pips. It did move down. So that trade and those both of the ones that are drawn were correct. That was the opportunity. Now, if price does come down here in the next 30 minutes, it's already been 15 minutes since the H4 candle is open. The new H4 candle is open. So in the next 30 minutes, if price does come here, and we do get some sort of an M15 kind of a candle that I'd like to trade, like similar to this, I'd look to take a trade, but I'd wait for another 30 minutes. Yeah, so because you got to remember now the moving average is price above the moving averages. Got to remember that, right? Price is above the moving averages. That's the M30 price is trading above it. We've crossed over, price is above it, came back, pulled back into it, went above, came back to the moving averages, pushed up, didn't touch it, pushed up, big push up, 112 pip push up, and now it's come back to the moving averages. Now, are the moving averages going to hold and push price further up, or are we going to continue down? And somewhere here, these moving averages cross again. We don't know that because moving average is a very slow lagging indicator. So I don't use them in my decision making process. I don't use them in my execution process. They're just there to kind of tell me if price is above them or below them. But I do not use them in my analysis, nor do I use them in my executions. We tapped that. We tapped it. 282. 282. Did tap it. We did tap that. 282. Seven four seven 274. 274. 15. 11, 12, 16. Hmm. $74. I wanna take a trade here right at this 5-minute candle close. We missed it. This was the place to take the trade, but we missed it. Just push straight up. I don't like taking it a second time because price could just continue down. $23, $26. Okay, that's one position. If you do come here, I'll take another one, but we're gonna manage risk here, just like we did the other time. Price breaks this low 317, I will begin to manage risk. We'll take a position here, the next position. I split my risk in half. So 362, 362, and then my okay. Now price begins to close below that. I will yeah, we're pushing down, but 2501 isn't giving up so easily. So we gotta manage this trade. Gotta manage this trade. When we that's a 5-minute close. It's got a wick, a 15-minute. I might just close this position off because this trade was opened a little too early for my liking. Just close the yeah, close that position off. I don't. Yep. Just wait. Just wait. Just wait. Six seven nine 148. 13, 17. See what this M15 candle does. It's going to break the low. I think it's going to continue down. Yeah, it's going to continue down. Yeah, it's going to continue down. Yep, as expected. Prices pushing heavy. 140 pips. Yeah, that is the high of the day. And now we are coming to test the low of the day, which is the London low, which I mentioned at the earlier during the session. That's the high of the London session. That's the low of the London session. And price is now coming to either break the low of the London session or respect the low of the day. The low of the London session is the low of the day. So either it's coming to break it or respect it. Gotta wait for this 15-minute candle to close. Got 14 minutes left. Price could continue down. Could easily continue down. Do nothing. Do nothing. Absolutely nothing. Just wait. So that candle there is a sell signal candle, and it is from a high liquidity zone. It is from H4 demand. It is from high liquidity zone. It is from the area of interest that we marked, and that candle was a sell signal candle. Right there, that's a sell signal, and stop loss goes above that and straight down 76 pips, straight into H4 demand, at which point you would close 70-80% of your trade, close your entire trade here, because we've come from zone to zone. We've gone from H4 supply to H4 demand. So you would close majority of your position, or you would close your entire position here if you were trading as per the signals of the indicator and as per the trade plan. That would be your trade for the day. And even this was a buy signal. Again, that was the trade for this was also a trade for the day. With the New York Open, price pulled back to the EMAs, price above the EMAs, pulled back to the EMAs, and then stop loss goes below the candle, 29 pips, and then goes up into our area. So you could have got out at that area that we had marked previously, where that candle was here, right there. You could have got out there, which is about a 67 pip move. From there to there, from the high of that candle, you got the entry and taken it out here at about 67 pips. And now we're pushing back up from the London lows. I want to see how this candle is going to close. Whether it will do something similar to this. 1730, 1745, remember this candle? And then pull back down and then get up. It is doing something very similar. It is pushing up. Broke below this low and then decided to push up. Let's see, 10 minutes more for this candle to close. Let's see how far whether it will push up, how far it'll push up. If it does close a strong bullish candle, then we may have the opportunity to look for a third and final entry. And that's it. That would be the third and final entry, and I will, no matter if that's a win or a loss, that's it. I'm done. So far we've lost 0.45%. 0.45% so far. So the maximum I'm willing to lose on a day is 1%. So we've lost 0.45% so far. 0.45%. We wait. We got 9 minutes for this candle to close. I'll be back in a few minutes. All right. 3.5 minutes for the candle to close, and that will be about 45 minutes after the H4 candle has opened. The new H4 candle has opened. So but if I do decide to take a trade here, we've got to be very careful how we manage risk, because we don't want to lose. I don't want to lose um, any more than 1% today. So I'll be very careful of how I take a trade. 685.092. $92.52. That's my stop loss. So that's my risk. 18 pips. Okay. Let's say 19 pips. Stop loss is at 19 pips. So let's see how this candle closes. I got a minute and a half. Okay. It's unlikely this guy's trade is going to. Okay. Yeah, the 50-minute candle is closed. So 40. And the other one here, 83. Okay. Stop loss. $52. Right. Gonna try our best not to lose more than 1 or 1.2% if this trade goes against us again. The second trade that I did take was a bit unnecessary. Should have waited So wait for price to come deeper in, because we have figured, we have um, identified this area as a high liquidity zone area, and price had just come just there, but the base was a little further down. See, that's the base, right? That's the base. So that's the drop, base, 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 drop, base, 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 leg out, right? So that's the base. That's the beginning of the basing candles. That's the area, 23 pips. So price hadn't come there yet at this candle, but this one did. This one came deeper in, and now we have a high. Now we want to see if price will come down and get us in, and we can go up to maybe recover some of our losses today. Um, let's see. But if price continues to push up here and go all the way up here, then if it starts to close above these areas, if it starts to close above 2508, this daily SR level, above these areas 2508, then it's unlikely the price is going to come back down to grab liquidity. So if it's going to do that, it's got to do that within the next two 15-minute candles. We are pushing up here. So on the one now, we have a very strong rejection going up, but price has to come down. It has to come down to get us in, to get us in. Otherwise, we cannot. Yeah, it did come there though. Not sure if it's going to come. Might just come there. Two 273. That's about 4.5 pips away from our sniper entry. Price might not come in, it might just continue up, might not come down. Because if this 30-minute candle closes, then there is support created, and the next candle may not need to pull back so low for a bottom wick, may not need to pull back 40-45 pips for a bottom wick. Probably just come here and continue high. But we have to wait. We have to wait. Let's make that 287. Yeah. Yep, we're pushing up. We are pushing up. Got the candle, and then we're pushing up. Created a bottom wick on the M15, and we're pushing up. Mm. So I'm going to be here for the next 30 minutes or so, for the next two M15 candles. This one and maybe another two. And by then, if we don't have, then that's going to be the end of the session. And I might consider leaving these trades. I might consider leaving these pending orders for another 30 minutes after the session ends to see if price comes there. And if it does come there, obviously I'll manage risk if price goes against me. But let's see what happens in the next 35 minutes. If price decides to pull back, or if it just continues to carry on, if price carries on and starts to close above 2508, if M15 candles start to close above this daily SR level of 2508, then it's unlikely the price is going to pull back down here. We're going to then just continue up and touch this, and once we touch this, that's the end of the setup. So which means if price gets here without a pullback to at least this area, the sniper area, that means price did not need liquidity to make the move up. It did not need liquidity. That's the whole the method of this particular way of trading, is to wait at an area where price could possibly come to grab liquidity. Wait at an area, at a high probability area, at a high liquidity area where price could come back to grab liquidity. That's the whole idea behind this system. So we identify the high liquidity areas. This is a high liquidity zone. That's a high liquidity zone, and we wait at those areas for price to come back to grab liquidity, continue down. Now, if it doesn't make the move up, we draw the fib and we wait. If price does not come to this area, to 502.87 or 502.40, doesn't come to that area, then it's just didn't need liquidity. It had enough to make the move up to this point here. I would like to see price close here. The M15 candle closes here, and the next M15 candle breaks this low and come down to get us in on this trade. To break this low, the next M15 candle, but that depends. The higher this candle goes, The further this candle goes towards 250864, the less likely it's going to come back to break this low. The next candle, the less likely it's going to come back to break this low. The higher it goes, it means that it just has enough volume to continue higher. And we are pushing up 3 minutes of the candle to close, and we are pushing above this level, above this resistance, M15 resistance. If you go down, if you don't go up to the M30, that's clear resistance there, M30 resistance. If you go to the H1, it's still the same resistance, 2507, 2507, 2507 area. So if price begins to close above 2507, then I'm afraid the next candle might just break this candle high and continue up without pulling back. Yeah, a minute for this candle to close, and we seem like we're closing above this area. That's a big move up. 47 pips, 78, almost 80 pips, 80 pip move up. It's unlikely that price is going to come back down another 60 pips to grab liquidity. Yeah, we are closing above the daily SR level and above these resistance M30, H1, M30, M15. We are closing above them, and we are pushing up, and we've broken that high. So 51. Yeah, price could easily go up all the way up here. Yeah, it's a strong push up. If you look at the H1 candle, that's a massive liquidity grab. That's what it is. That's a liquidity wick. That entire move up is a liquidity wick. Huge push up. That's enough liquidity to get right back up here. That's enough liquidity there, 60 pips, to get up another 60 pips up here. And we may continue to close bullish here above 2505. We may continue to close bullish above 2505. Still within this range. Still within this range. We have candles closing below this 2505. We have candles closing above it. again back below it, again back above it, at it. And now this candle may close above it today. We have about 5 hours left for the day to close, for the day to end. We're coming to the we're coming to a time where there is less volume. This is 3 hours after NY open, so this is less volume time. Um, if you look at the NY open move, that was a move. That's a 100 pip move. Then around the New York Stock Exchange move, that was the move down. That's about 140 pip move. And now we're coming towards this is the London close move. That's about a 80 pip move. So yeah. Yeah. So London, this is the London close move. So we have the NY open, we have the NYSE open, and then we have the London close. So those are your volume hours for the day usually. Those are your volume hours. Um, in between you have stuff things like the COMEX open and all, but they're not that important. Rarely do you see moves happening, but you've already had three moves for the day. One, two. This was a big one, 140 pips, and then this one was about 85 pips and could continue now. We could continue down. We could continue higher now because this could be. We're at 11 a.m. New York time, just past 11 a.m. New York, and this could be the direction for this is the pullback to grab liquidity for the direction for the rest of the day. So we could continue going up, and it's unlikely that price now comes down. I'm going to keep these orders open. I'm going to be here for another. I'm going to be here for another 10 minutes. And yeah, till about 11:15 NY, and then we're going to call it a day. And yeah, so today would be a loss of 0.45%, a loss of 0.45%. It's very important to note this candle. That was a 45 pip candle, and price did not come back to that candle for liquidity today. Usually price does. That's the whole point of this method of trading. So you had this candle here or this candle here, and price does respect the high of that candle, trades within that range of that candle, trades within the range of this candle, respects the high and pushes down. Okay, that's the whole point of this method of trading, that it grabs liquidity. The next candle grabs liquidity from within that candle, within the high and the low, and then respects the high, of course, and then continues down. And in this case, we have this candle here, but price never came anywhere near close to it. Just closed here, and the next candle opened right there with a little wick here. So if you look at this, what 1745, if you look at the go on M1, and that was the move up. It was a move up from 2505. So price just grabbed liquidity from the weekly resistance of 2505 and continued up. Decided to continue up from 2505. Did not need to come anywhere into the body of that candle to grab liquidity. It decided to grab liquidity from the weekly resistance area 2505 and then continue up. And this candle, this price could now easily continue to push up for the rest of the day. For the next couple of hours, we could see price heading to the first stop will be 2512, right around 2512.50, and then here around 2514. So 2512, 2514, and then if volume continues, we could even push further up. But that's it. That's done. It just did not need to come into the body of this candle to grab liquidity, because that's what price usually does. If you look at what it did here, this was from the H1 demand zone, the high liquidity H1 demand zone, this candle. And let me just zoom in there. And price came back into the body of that candle to grab liquidity, respected the low, and continued high. In this case, it didn't need to do that because this weekly SR level acted as a place of liquidity. So maybe orders were swapped at this weekly resistance level. That usually can happen. You have institutions having sell orders at this level, and then when price gets there, they do swap their orders so that they don't lose anything. They swap their orders from sells to buys, and they grab liquidity right there and they continue high. That does happen. So it happens quite often, in fact. But they don't happen everywhere on the chart. They happen at certain areas, certain important areas. So this, for example, at a psychological number like 2,500 or 2,000, where orders get swapped, buys get turned into sells when they come back there for the second time. And at this weekly resistance, which is a very important area, that's why we have it marked here, right there. Look at that. That's weekly resistance. Look how many times price on the daily time frame has been bouncing on that line. Many times. So yeah, we are heading up here. All right, in about 5 minutes, we're going to end this session. And yeah. Yeah, so price, as I said, price closed above this resistance area. We have the same resistance on H1, M30, M15, price comfortably, M15 candle closed above it. The next one pulled back a little bit and is continuing up here. Once we get up here, this setup or this trade, this idea of price moving from this high liquidity zone up, the idea of price, this idea of getting a buy trade from this high liquidity zone, H4 demand, is done. It's done. Soon as price comes anywhere close to this, a pip or a pip and a half, or touches this, the idea is done. This idea is over. You no longer, I no longer wait at this area for entry because this idea is finished. So as soon as you reach there, there's a reason why this fib line is where it is right now, where it is, because once this thing is done, the idea is done. You'd see that even on Friday. I showed, if you look at Friday's, if you look at yesterday's uh, live session, I showed how price, this was the wick that we drew it on, and price came exactly, touched it, and the trade is done. And now it's moving up, moving back up to that area. Right? Yeah. Okay. Okay. That'll be the end of the session. We are done, and we'll be back. I'll be back tomorrow. Do the same thing tomorrow. So, and let's see how it goes. Tomorrow is CPI. It's a big day. So we're always going to wait, 15 minutes after CPI news to see if we have a setup. We're going to do the exact same thing. We're going to draw high liquidity zone areas, wait at those high HLZ areas, high liquidity zone areas for our trades. All right. All right, guys. Thank you and goodbye.